Hey guys, welcome back to the channel. In the next few minutes, you will learn about the state of unit trust in Malaysia and why it doesn't look so good. And to be fair, it hasn't really looked good since the beginning. Regardless, we do not own any unit trust as of this recording. And now what we say is financial advice. So let's go straight into it. So first fact you have to know is that slightly over 10% of 556 unit trusts. Now I know you clicked on the video, we said we reviewed 700 over. We'll explain why there's a difference. But only 556 out of 556 unit trusts, only 11% actually beat EPF across 5 years. That is quite, that's a 1 in 10 success rate, right?
Correct.
And then, if you're going to take risks, and let's say you only beat EPF by even 6% or 7%, what is the point? If you're taking risks, you should, in my views, at least double your returns. And of course, we'll see more stats later on. So the reason why we took 556, talked about 766, and then here we talked about 556 is because not every unit trust is more than 5 years old. The entire market, according to SC, is about 766 funds, but those that are more than 5 years is about 2/3 of them.
Before that, also want to share a little bit on the net asset value for the total funds, right? So there's about 500 billion, which is half a trillion, and it takes account to the Bursa's total market cap is about 28%, which is pretty huge. It's like 1/3 already. Okay, so this is the source of the customers, which is investors under their funds under management. So a total chunk of money, which is about 53.8% of the asset under management, is inside unit trust. This has been the preach since the 80s, 90s, or even 2000s. So when they say where to put your money, right? If it's not stocks, if it's not EPF, then it's unit trust already.
Worth noting is that they actually dropped. It's dropped over the past year.
Yes.
That was from 2021 to 2022. But when they say sources of clients fund, what do they mean?
The money that they manage, the clients, that's funds under management.
Okay.
Yeah. So it's still a huge chunk of money that is put inside unit trust, so to speak.
Fair enough.
Yeah. And this is where they invest their assets. So one is that still majority is in Malaysia, 77%, and then the remaining 23% is outside. Also, another one that is still equity dominated. It's pretty similar to EPS model also. EPF also something like equity, huge chunk. I think their fixed income also is quite more. But yeah, and then so that is how they actually asset allocate into each fund. Okay, this is just a quick overview stats on the 5-year average return for 766 unit trusts. So in total, you can see here the rate. It means that the trusts that didn't manage to beat EPF's return. So there's about
the rate is 0 to 5.6.
0 to 5.6%.
Right? So they have positive returns, but they are lower than EPF. So about 2/3 of all the funds. Those that actually lose money, 20%. So if you buy an EPF, 1 in 5 chance you're going to lose money. And then there's a 2/3 chance that you are going to make less than EPF, right?
Yeah.
And 8.7% is between 5.6 to 10%. So lucky you if you are in this arena. But if you ask me, that's not really where I want to be. Again, if I were to be investing in the unit trust, I would want that 2.7%. And that obviously is very rare. If my math serves me right, that is only about 15 funds. 10 to 15 funds?
Yeah, less than that. Yeah, correct.
Right. So we'll look at this a little bit later on.
Okay, so a quick few fun facts, right? So number one is that the oldest fund that is launched is actually in 1966. That's by MIDF Amanah Growth. Pretty old fund, 50 over years old. Then there's about 159 funds, has been around for more than 20 years. And the top 3 banks, or maybe even the mutual fund, is actually Public Bank, Public Invest. They have 164, followed by RHB and Principal Management, which is alongside with CIMB. So that's why you can see that there's a lot of like public mutual. People talk about public mutual because the reason why they have a lot of funds that they covered, and they're also quite aggressive in terms of their sales. And the fourth point here we have is 112 funds actually reported loss for 5-year average return out of the 766, which is actually pretty quite a lot actually. And only just now we mentioned 11% of it beat EPF's 5.65 return. Okay, this is going to be a very short video. So I'm just going to share you the best and the worst 5-year average return. So the best one we have here, we can see that there's two names already is
Income.
under the same. Yeah. So it's KAF Core Income Fund and also another one is KAF Tactical Fund. You can see that their returns are actually pretty astronomical. And if you actually dive deep into the asset that they invested, right, quite a number of the companies that invest is in IPO, number one. Number two is that they are in the company that is in the right time. So for example, like your YTL Power, your YTL Corporation, they are also in the right time and they made tremendous returns. That's why you can see that their return is like 35% over the 5-year average return. I haven't go through M Conservative and PMP.
But it's interesting that M Conservative has one of the best returns.
Correct. But it's still a small fund.
That's kind of rare. Yeah, so you have BMR, PMB. So these are actually slightly less well known, like CAF.
Yes.
I mean, you don't have the big three there, right? Or at least the big two public banks here. They're not there.
Correct.
So that's interesting. The worst, Amanah Raya, Kenanga, Global Opportunities Fund, BSN. So if you look at Kenanga, first of all, the NAV is so tiny.
They draw down a lot already after I think it's not really that a performing fund. That's why they kind of draw down. It's the same for Amanah Raya also. I believe they used to manage 500 million over.
And now it's 1.9.
Yeah, because they draw down a lot. Okay, there's also a reason why they draw down a lot, which is going to be another slide. And it's going to be very shocking for you guys also. But anyway, this is their return so far, the worst performing one, and we'll go to the next slide, which is the most shocking.
It's interesting. It's actually a global. So okay, first is we can see investing overseas is not as easy as people think. Right, it's down really bad. 0.03 means it's 30k.
Yeah, correct. Actually, it's 28.8k if I'm not mistaken.
Okay, and I think one thing I want to find out is Amanah Raya Cash Management Fund.
Yeah. This one is the next slide. Why? They bought Sebab Dynamics bond Sukuk.
Cash.
Correct. So actually there's a huge chunk of money. They even mentioned they bought into this bond and then Sebab Dynamics reported they're going to default the payment for this bond. So it is pretty bad.
Bonds are not cash technically.
Yeah, correct.
And usually when people consider bonds as cash, they are buying ultra safe bonds like US treasuries, maybe even Malaysian government securities, but definitely not corporate bonds.
Yeah, exactly. So far, I think their bet didn't pay off. That's why I believe why they start to draw down and also they stop the fund in totality. So there's actually risk in it. You have to see what sort of stuff they are investing inside their annual report. It's not those like just looking at their returns only. So that's something that you need to know. And this is just the final comment is that the returns that you see in the entire video might not include the management fees. So I'm not sure whether they reported gross or net. Some people, they will say that they already included it. Some, they will say it's not. So it's pretty unknown. Whether they say that or not. But then to be safe, you just take into account their management fees and then you deduct the entire return. Then maybe the number of funds that actually beat EPF may be even lower. So end of the day, unit trust is actually you still need to do a lot of homework in order to get the right unit trust and also make returns that is better than EPF. Because if not, just stick to EPF or even invest in S&P 500 index.
I always tell people that unfortunately, unit trust wealth transfer program. We have this term called WTP, wealth transfer program. It's transferring wealth from the people to the banks, a lot of these big banks. And I think the big one is the management fees. So if you include management fees, you're looking at that 2.7% that made more than 10%, you probably drops down to 2% or less. And that's only like 15 funds, right? Or less than 15 funds.
Correct.
So it really isn't easy. And there's a whole lot of reasons why this is the case, which maybe we can do in another video. But you know what, guys?
Yeah, so this is the our FIRL Pro portfolio, which is not really a unit trust, but then it is a portfolio that we haven't picked the stock one by one using our research team's knowledge and also our own analysis on companies. So in total, right now, I believe there's about 19 companies that we have invested in if you calculate over here, and they have been returning about 16%. So FIRL Pro is a program where we write our own stock report to our members inside FIRL Pro, and minimum we will write 2 reports per month, and you also the report's length is about like 15 minutes or even less than that.
1 cup of coffee, that's what we will say.
And the bottom part here you can see is a catalyst portfolio, so that one is more of a short-term trading. If let's say there's any short-term catalyst, then we will announce it to our Telegram group, which is inside FIRL Pro, and this catalyst portfolio is non-FIRL Pro stocks because FIRL Pro we tend to hold it for long, and catalyst is, if let's say the catalyst is not there, then we will start to exit. But so far it has been returning pretty well, which is about 14% overall. And if you want to know more information about FIRL Pro, we have this free sample for you. It's totally free. You can just check out how we write our report on FIRL Pro, and also you can see some of our videos in the SIB program as well. And you can check out the links is in the description and comments.
And that's it, guys. Thanks for staying out there. Let us know what you think of unit trust. Let us know your experience, right? Whether you are
making money,
the 2.7% or you are the, 89%.
And more importantly, if you are making money in your unit trust.
Let us know. And guys, thanks for staying. And I hope to see you in the next video.